This documentary is supported by EBRD.
Over 4 episodes, we have shown you the faces and stories of Bulgaria's most successful entrepreneurs, ecosystem builders, investors, and business leaders. People who have put our country on the global map, in stock exchanges, in the headlines of international media. They are the reason Bulgaria is becoming a serious tech hub. But at some point, these businesses leave.
We didn't set the company to be the first unicorn. We always wanted to solve a big challenge, a big problem, to find a big pain point that we were good at solving and to operate in a big market. And we knew that eventually we're going to get there. The unicorn status wasn't something that we were dreaming of or something that we were striving for in terms of achievement. It came very natural as the company progressed and as we grew, and our appetite grew even more and more and more. And I think now actually the best is yet to come. So the unicorn status by itself, it's a big milestone. First company from a very small country like Bulgaria to achieve this, kind of paving the way for others to do this as well. But it's also a big milestone for the ecosystem, because in the last round that we closed, and we've had I think 2 or 3 different series of events where we actually flew in a lot of American VCs to Bulgaria, to our office, to see the ecosystem, talk to other companies, which was, I think, a very good experience for everyone, not just us.
Payhawk is now one of the leading spend management platforms, serving businesses across Europe, the US, and the UK. With offices in London, Berlin, Barcelona, Paris, Amsterdam, Vilnius, Sofia, and New York, it supports customers in over 32 countries. Payhawk is Bulgaria's first unicorn, but their HQ is in London. They are not the exception, they are the rule. The question is, why?
So I've dealt with M&A in Southeast Europe for a long time now, and it's not the easiest region to sell assets from, just because it's overlooked. People look at it, it's not Central Europe, it's not Western Europe. And so generally, if you want to sell an asset and it's not a global asset, it's not a technology. If it's a technology global company, it's a bit easier, because then you don't have the risks related to the region. But if it's a different industry, investors are generally a bit more kind of wary of the region, rightly or wrongly. Maybe it's partly image, partly it's reality. And so therefore you need an extra effort to convince them that the region is good, that the assets are good, which means that when you have an asset to sell, you really shouldn't have red flags eventually for a potential buyer. And so, which means that the preparation for exit, everything needs to be really professional and very well done in order to ensure that you can do a proper exit.
So, how do you change the reputation of the whole region? How do you convince Western investors your company is trustworthy?
Well, it's usually numbers. In the early stage is selling the dream. This is our team, this is what we do, this is our plan, this is how we execute, this is what we have achieved so far. And what has always been very fascinating when we talk to investors is how fast we were able to build our product. Find a few customers, expand in different geographies. When we started in the beginning, we thought that one of our biggest disadvantage would be that we're coming from a very small country, which means a very small local market. And that actually, in my view, became our biggest advantage, because from day one, we were thinking internationally, like how can we sell in Germany, how can we sell in the UK, how can we sell in Spain, in the Netherlands, in all the different EU countries. Back then, the UK was part of the EU as well. And that's how we built our product. Our competitors, on the other hand, they had very big local markets, and they tried to tailor their product first to serve the local market. But once you want to go international and try to expand into other markets, it's often a challenge. And with us, this was something that we knew from day one. Something that we knew from day one also is that we're good at building software, and we wouldn't give our software for free. And that's the emphasis in our business model from day one, to have a very, very sound unit economics, because we are making money both on the software and on the payment service.
Bulgaria is making significant efforts in reshaping the business landscape, launching more initiatives that support smaller enterprises and foster sustainable growth. For many startups, securing funding is only the beginning. Scaling and preparing for public listing require structured financial pathways that ensure long-term success. Since 2022, Bulgaria has introduced a key stepping stone for high-growth companies, BEAM, Bulgarian Enterprise Accelerator Market, a specialized stock market segment designed to help startups and scale-ups access capital while maintaining flexibility.
5 years ago, raising capital through the Bulgarian Stock Exchange was something only large and well-established companies could do. But B-Market changed it, and it has made this opportunity accessible for small and medium-sized companies, including those that are still in their initial development phase. But what exactly is BEAM? It is a segment of the Bulgarian Stock Exchange that allows companies with shorter business history to raise up to 8 million euros every 12 months, and the process is much simpler compared to the main market. There are less regulations, meaning the listing is much faster and with lower compliance burdens. And unlike the companies on the main market, BEAM companies remain private. And this is a huge advantage because it allows them to continue attracting investments from both the private and the public investors, giving them access to funding opportunities from the both ecosystems.
Through BEAM, businesses can raise capital, gain market credibility, and prepare for a future IPO, while adhering to regulatory standards that attract investors.
There is something really exciting that I want to share, that the Bulgarian companies can now list simultaneously on both the Bulgarian Stock Exchange and Frankfurt Stock Exchange in a single process. And that is possible thanks to the new segment of the Bulgarian Stock Exchange, Eurobridge, which we launched last year. And that's a huge advantage for the Bulgarian companies because it gives them access to much larger pool of international investors and opens the door to significantly more capital.
But what does it mean to create an IPO? Ivaylo Penev will walk us through the very basics of what it means to build an IPO and how a startup transitions from private to public.
You are a startup, you've bootstrapped, gone through the seed rounds, through the series A and B. Now it's time for the big money. And basically you need to prepare for this because it's a totally different experience than going through the rounds with the VC and private equity funding institutions. So what you need basically is what is called an investment banker. Those are the companies that help take other companies public. So they can help you in many ways. They know how the investors, your new potential investors, because they're a totally different breed than the ones you've worked with so far. So the investment bankers know what they want to see, how they want to see it, and they basically help you with this. Of course, their value added doesn't stop there. They may help you prepare your books. They may help you hire investment relations director. Help you with the pitch decks and the presentations for the investors that you're going to address. Perhaps help you with finding a Big Four auditor, because if you're aiming at large market with very big ticket and very sophisticated investors, that might be an issue if you don't have a good auditor. They may also help you with things like ESG and diversity, equity and inclusion standards, if those are things that will matter to your potential investors. Then comes the drafting of what is the main document of the whole offering, which is called the prospectus. It contains a whole lot of regulatory information. From what I've heard, by the way, some of the large investment banks on Wall Street now use artificial intelligence to draft 95% of those prospects. Because in reality, I've seen some of them. I'm even one of the few people that read it every now and then, because there are hundreds of pages, and most of those are legal disclaimers, risk disclaimers, things that are quite typical or homogeneous among the different deals. So those are things that an artificial intelligence can actually do. But then comes the magic of the investment banking, and this is actually the valuation and the pricing of the issue. And it really is a magic sometimes, because every business has an intrinsic value, but always in the eye of the beholder. obviously the owners of the business and the early investors may want to get as much money for the new shares, because this means that their valuations are typically going up. On the other hand, the investors, typically the ones that play on the IPOs, those are more mature fund managers, institutional investors, maybe some retail or high net worth individuals. They want to, like everyone would, they want to buy things cheap, because they want to keep some of the upside for themselves. And here comes really the magic of the investment bankers to do the right pricing. If markets are hot, then there's a lot of money chasing too few deals. You can basically sell anything at obnoxious prices, but sometimes the markets are not that hot. They may even be in depression, but it doesn't matter if your business needs the funding now and is ready for this step. Then the founder might not get what he believes his company is worth, but still, the deal has to go through. And so the big day comes, orders start coming in. Somebody surprises you with a fatter check than you expected from them. Somebody is not picking the phone because they got cold feet at the last moment. And then the bell rings, the market is closed. You pop the champagnes. Congratulations, now you're a public company and your net worth is out there, so you know how much you're worth already. And be ready, because this net worth changes with every tick of the market. So basically, this is how an IPO goes.
An exit is seen as another form of success for a founder, as it provides financial reward, validates the business's value, and allows for reinvesting new ventures. It can take different forms, such as an acquisition, investor buyout, or IPO, each offering varying degrees of liquidity and involvement post-exit.
For a founder or an investor, to exit essentially means to sell their shares fully or partially, or majority of their shares, to either a third-party buyer, strategic or financial, or via an IPO, but essentially to sell their ownership in the company. So exit is really the act of exiting the company. So again, it depends. There's a difference between founder and investor shares, and it could be an exit for one or the other, but usually there's a number of avenues. One is a strategic investor, so someone from the industry that wishes to expand in the geography or finds another interesting reason to buy the company. The other could be another financial investor. So for example, we as a fund have, we could sell to a bigger fund, and that bigger fund could buy out also the founder. And so that's also quite typical in the industry. There could be other options, which is an IPO. Clearly, IPO is a very popular route. It's not very easy, especially from out of our region, but it's one of the routes. And then there could be various recapitalizations of the company. So you can borrow money and then use the money to buy out the founders through various schemes. But I would say the strategic, financial, and IPO are the most common routes for an exit.
Some founders aim for IPOs to stay involved, while others see a well-timed exit as the ideal outcome. When would be a good time to exit a business?
That's actually a very good question. And a lot of founders, and we've seen it, make the mistake of exiting too late, because they say, I'm growing, next year I'll be growing again, so it's going to be a bit more value and more value. And that can be very costly mistake for a number of reasons. First, the economic cycles come and go very fast. And so if you miss a cycle, the valuations next year, even if you've grown, can be compressed significantly. We saw that in the fintech sectors, in many sectors. And that's one. And the second is you want to sell not at the absolute maximum, because even if you grow at 2%, next year you'll be a bit more, but at the higher trajectory of growth, which means that if your trajectory of growth is faster this year and is going to slow down, it's better to sell a bit earlier. And so we have this favorite quote, which is, they asked one of the Rothschilds, what's the secret of their wealth over the centuries and why they increased and maintained their wealth, and he responded, I always sold too early. So you always, don't be greedy for the next thing. Just at some stage, get money off the table and exit in time, because it's, markets tend to go down as well as up.
Scaling, IPOs, and exits are milestones that define a startup's journey. But what does success really look like beyond the headlines? For founders, growth comes with new challenges, increasing pressure, shifting responsibilities, and the constant need to adapt. In this final section, our guests share hard-earned lessons on navigating these transitions, the realities of running a mature company, and the mindset needed to sustain long-term success.
And it's not only one actually, one will be the investors, the second one will be the regulators, third one will be the media. Everybody now wants, you're out in the world and everybody wants to look at what you do. Other thing is that you're dealing with different types of investors. So we touched this earlier, of course, that while we're still private, your investors are actually becoming part of the business. They are very much involved, and for most of the time, those investors help you with new business ideas. They take care of, say, probably your finances. They connect you with other companies that you can collaborate and grow together with. While on the public markets, you have a very passive kind of investors. They just want to, invest, see their investment grow all the time. And this is something very interesting. Now you're playing what's called the earnings game, which means that every quarter you have an earnings call where you discuss your results with the investors. And boy, do they have a big expectation. So if you're a very large company, you probably have a bunch of analysts that is going to cover your stock. So they're gonna talk to you, call you up at every moment in time, unless you're in the so-called quiet periods before earnings where you can't discuss anything with anybody. But they're gonna call you up, they're gonna issue their projections, and when that earnings day come, oh boy, you better beat those projections, otherwise you'll be punished by the investors. Sometimes that's not enough. Even if you beat the analysts' estimates, you also have to show growth versus the last period. And probably the perfect scenario, what some people call the grand slam, is if you beat the analyst expectations, beat the previous period's results, and increase the future guidance. If you got this, everybody will buy your stock. You'll have easy access to the capital market, say if you want to do a secondary offering. If you show the results, money will be easy to get.
In a small ecosystem like ours, you need to be very careful on what you say, how you talk to people, how you give examples, what to do, what not to do. That's on the other hand. On the other hand, it's very empowering because you're doing something for the first time. We used to be very strict on what we spend in terms of marketing budgets, how much aggressiveness can we put in our go-to-market plan, the different iterations and the different tests that we wanted to do. Having enough money in the bank actually can kind of free you up from that mindset, and you can explore different things, not be afraid to fail. And you can tailor your product, your go-to-market strategy, your hiring, your expansion plans based on the best execution that you can essentially strive for, because money is no longer a resource that's very limited.
And we actually, even internally now, we have become, actually we're very thorough in the way that we look at financial, legal, tax, which is typical, but we also look at ESG due diligence these days. Then we try to assess the integrity and the psychology of founders and the team, and then we do quite detailed commercial due diligence. And for that, we hire either international consulting firms, or sometimes we just hire Western specialists who've been in a given industry in the West, and then they come and help us as individuals. And then on top of it, we can have diligence on IT systems, various other risks. And so we try to be quite thorough in the diligence process. And it's not necessarily to find faults with the company, but really to understand where weaknesses are that we can address in a 100-day plan, or with the next steps once we invest.
Because maybe one or two are very successful companies that either got acquired or potentially do an IPO somewhere. Let's hope so. And that's gonna, in essence, open the doors for other companies to be born, people that are young, that have started in those companies, that have seen the process end to end. They can, be bold enough to pursue their own dreams. They can start new companies. The ecosystem seems to be working pretty well. We have very specialized media, events. We have good local VCs. A lot of the American VCs and a lot of the European VCs are already very interested in this region. So I think we have all the ingredients in place. It just takes probably another few years until we see something big. And this is actually one of the for me, the biggest success that we can have as a company is if we can multiply the effect that we did with our company and create other companies, move the entire ecosystem, something that Telerik did for us when we were employees in Telerik 10 years ago.
However, success takes many forms. While going public can be a powerful indicator, it's not the only path to building a company. Some founders choose to scale privately, others opt for strategic acquisitions, and many redefine success on their own terms, focusing on profitability, impact, or long-term independence.
That's a tough question, really. Some very successful companies never make it to a public status. So maybe it's really what the founder perceives that they want to do, or maybe it's the need of a totally different and, let's be honest, a much bigger pool of money that's available on the public markets. You gotta have it in your conscience that you want to really go public, because it comes with some strings attached. I mean, this money is by no means free and available to you at will. So there is this thing that you have while we're still private company, that there is an information asymmetry. Because you're not required by a huge pool of investors, you're not required by regulators to disclose any information. You have a very, let's say, limited set of investors. And most of them actually are not only your investors, but maybe your board members, trusted advisors, people that help you improve their business. So that they have a lot of skin in the game typically. But you need to share with them only. That's a very, let's say, small group than the one you have. And you need to share with once you become a public company. So this information asymmetry is something that you have as an advantage.
Over the course of this series, we've traced the journey of building a company, from the first steps of bootstrapping to scaling across borders, securing investment, and navigating the complexities of IPOs and exits. We've heard from the founders, investors, and industry leaders shaping Bulgaria's tech landscape, each with their own perspective on what it takes to succeed. If there's one takeaway, it's that there is no single blueprint. Every company follows a different trajectory, and every founder faces choices that define their path. Some aim for rapid expansion, others for steady, sustainable growth. Some dream of ringing the bell at a stock exchange, while others see success in building a profitable, independent business. But no matter the route, the most valuable asset remains the same: resilience. The ability to adapt, to push through challenges, and to recognize when to take the next leap. This is just the beginning of Bulgaria's tech story, and the founders writing the next chapters are already on their way.
This documentary is supported by EBRD,